The US dollar has been the dominant global currency for a generation, but many people are now questioning whether that period of dollar dominance is coming to an end, including its use as a global reserve currency. In this video, we look at the evidence behind that claim, and we look at the precedent of what happened to the previous global reserve currency, which was sterling. We also consider the alternatives to the dollar, and finally we look at the economic impact on the United States if de-dollarization were indeed to occur. This video is sponsored by Wise, and if you use the link in the description below, you'll get a free first transfer of up to £500 for new accounts. So let's look at whether this is the end for the US as a reserve currency in a bit more detail. Let's begin by looking at what we mean by reserve currency. To understand that, let's begin with what we mean by foreign exchange reserves. These are just foreign currency holdings by your central bank. So for example, the Federal Reserve could hold renminbi, or it could hold sterling. Then a reserve currency is just one of the most popular currencies which are held by central banks across the world. How does a central bank end up with foreign exchange reserves? Well, it simply has to be in a country which exports more than it imports in currency terms. And if that's true, then it's going to accumulate that foreign currency and presumably invest it in government bonds in that foreign currency. A nice example is China, which famously has the largest foreign exchange reserves globally. It has just under $3 trillion worth, in fact, if you look at the graph in the bottom panel here. But the reason for that you can see in the top panel, which is that it's exported more than it's imported. In other words, its net current account has been positive for a long period of time. Now, many of us find ourselves in a situation, either as a business or an individual, where we have to pay for something in a foreign currency, or we get paid in a foreign currency. And Wise, who's the sponsor of this video, let you do that very efficiently and economically. I first came across Wise when I had to transfer some money to a colleague in India, and I was amazed at how much cheaper it was to do that through Wise than it was, say, through my bank. Now, Wise was launched in 2011 with 3 founding principles for transfers. The first one is that they should be economical and fair. You'll notice that you see all of their rates up front. The second one is that transfers should be easy. The third principle is that the transfers should be fast. Most of them happen almost instantly or on the same day. Wise also offers the ability to set money aside in jars. This ensures that you don't inadvertently spend money which is generating income. For example, you could set aside money for salaries, taxes, or expenses in any currency that you want, and you can take money out of the jar anytime you like. Alternatively, if you don't keep money in a jar, the money that you keep in a Wise interest account will still earn interest, whether it's in a business account or whether it's in a regular account. Wise does this by investing in safe, short-duration government bonds in that currency. Now, returns aren't guaranteed because rates will vary with the interest rates which are set by central banks. Now, viewers of PensionCraft get a special offer from Wise where if you use the link in the description beneath me, you'll get a free first transfer of up to £500. And this is for new Wise customers only. We saw that a reserve currency is just a foreign currency held by a central bank. But which are the most popular reserve currencies? Well, as you can see in this tree map, the dollar is utterly dominant. That's still the case at the end of 2022. The total reserves stored in the US dollar are about $6.5 trillion, and that makes up 54% of global reserves. The currency which is in second place is the euro, and that makes up about 1/5 of global reserves. Then we get to the much smaller currencies. So for example, the yen makes up about 5%, sterling makes up just under 5%, and the Chinese renminbi, or the yuan, makes up about 2.5%. If we look at the proportion of money held in each of those reserve currencies over time, going back to 1999, you can see that the US dollar has become less popular. So it started off at just under 3/4 of reserves, and now it's at just over a half. So there has been a gradual tailing off of dollar popularity. Now, many people think the renminbi is moving up very rapidly, and it is in relative terms. But so are other reserve currencies, such as the Canadian dollar and the Australian dollar. It's not just about the amount of trade which happens in a currency, it's also the ability to earn revenue and interest in that currency. So if you look at the yield in a particular currency, the Australian dollar has been very attractive for some time now. When interest rates were very low, the Australian yields on government bonds were relatively high, and the volatility of the currency was also quite low. So in risk-adjusted terms, the Aussie dollar was quite attractive. So it's not just about trade, it's also about investment and risk-adjusted returns, which makes a particular currency attractive. To some extent, central banks actively manage their reserves to generate revenue. So why is the greenback being questioned now? Well, many people have pointed out that the dollar was used as a kind of weapon. It's been weaponized as a currency, and that was in the wake of what happened when Russia invaded Ukraine, when the US and many of its allies confiscated reserves from the Russian central bank. So other regimes around the world are worried about falling foul of Western government policy, foreign policy, and so perhaps they're moving their money out of the dollar as a result. If you don't want your reserves to be confiscated, well, you could store them in other currencies or perhaps in gold. In addition to that, some countries, such as Brazil, you can see here, are questioning whether they should trade in the dollar at all. So this quote, which was made when he was visiting Shanghai in April, is quite an interesting one. He says, "Every night I ask myself why all countries have to base their trade on the dollar. Why can't we do trade based on our own currencies? Who was it that decided that the dollar was the currency after the disappearance of the gold standard?" So certainly for bilateral trade, he has a point. Why should Brazil and China, when they trade with each other, not trade in Brazilian real and Chinese renminbi? Beside me here, you can see the amount of exports between the two countries, and they've certainly increased a lot recently. Now you can see that Brazil is running quite a big trade deficit with China, so presumably it's getting renminbi through that trade. So having renminbi reserves would make sense for the Brazilian central bank. However, being a reserve currency is not just about bilateral trade. Many countries choose to trade in dollars even if the US is not involved in the transaction. Why is that? Well, it's very cheap to trade in dollars. You can exchange them on any global forex exchange, and you can do that with tiny bid-offer spreads. And it's a relatively stable currency, which is an attractive prospect if you're worried about volatility. So certainly for bilateral trade, people could use the renminbi, but as a kind of trade currency, even if China's not involved, I don't think it's as attractive. Now let's look at a precedent for a global reserve currency fading, and this is sterling. If we look at the percentage of foreign currency reserves between 1950 and 1980, notice the fact that it's very gradual, the rate at which sterling declines. Now, at the beginning of this period, just after the Second World War, sterling made up about half global reserves, a little bit more in fact. But then gradually what happens over time, until we get to the early 70s, is that it declines to something like 1/3 of reserves. Then in the early 1970s, there was a very sharp move downwards as the US dollar became much more dominant. Now, the reasons behind that are kind of interesting and historical. If we look at a global map, there were several countries around the world which had sterling as their currency, either directly or indirectly, because the value of their currency was pegged to the value of sterling. The two would move up and down perfectly in line with one another. And these countries' central banks also held deposits at the Bank of England. But the colours on this map also show you what happened over time, which was the fragmentation of this so-called sterling zone, such that nowadays the sterling zone is non-existent. Some countries, which you can see on the map, left the sterling zone before 1972, but almost all of them left after. Why did sterling fade in this way? Well, it certainly started with the First World War and the Second World War, when, remember, currencies were pegged to the value of gold. Now, that requires you to have lots of gold reserves to back up your currency, but war's incredibly expensive, and this depleted the UK's gold reserves, particularly in World War II. Plus, at the same time, the US was economically ascendant. So in 1913, they established the Federal Reserve System, which stabilized their financial system. And after the Second World War, the US expanded into the vacuum left by the UK after it had to pay off all of its huge war debts. And there's another factor here, which is that the UK joined the European Economic Union in 1973. And although it wasn't explicitly stated to be a condition of membership, the fact that many Commonwealth countries held reserves with the Bank of England was a sticking point for countries like France. So certainly by 1973, that sterling zone had ended and the UK had its own fair share of economic crises which it had to deal with. And the long-term pattern that we see in the value of sterling versus the dollar is one of devaluation. The exchange rate used to be $4 to the pound. This is just after the Second World War. But really the period after the 1970s, sterling has been flirting with parity with the dollar, where it's $1 for each pound. The very high inflation period in the 1970s certainly contributed to that. The US had very high policy rates, and that certainly strengthened the dollar a great deal. So that was the first time that sterling had really got close to parity. Then there was another crisis in 1992 when George Soros broke the Bank of England and the UK was forced to leave the European exchange rate mechanism. Then in 2016, sterling took another tumble with the Brexit referendum result. So what it seems like is sterling has been weakened by each of these successive crises. It never really fully recovers to the levels it was at previously. So I think the primary lesson we can learn here is that once you stop being a reserve currency, it usually means devaluation of your currency. So what are the alternatives to the US dollar? A lot of people have been saying that the renminbi, the Chinese currency, could be an alternative to the dollar. And there are many factors holding back the renminbi from being a reserve currency. Firstly, it's not freely convertible. If you have dollars, you can convert them on any global exchange very cheaply and very easily. However, if you've got renminbi, there are capital controls. The second point is kind of interesting, which is that in order to get hold of a particular currency, it has to run a trade deficit. In other words, it has to import more than it exports. That just creates a flow of its currency out into the world, which central banks can then buy. Whereas, as we saw, China's been running a trade surplus for some time, and there's no sign of that ending. So if you did want to build up a stockpile of renminbi in order to perhaps intervene in the currency markets, you can't really do that easily unless your exports to China exceed your imports, which is fairly unusual at the moment for any country. Another global reserve currency hurdle, which I think China will find it difficult to reach, is whether you can have transactions which don't involve China, but which do involve the renminbi. It's completely understandable when Brazil trades with China for it to do that in renminbi. But what about if Brazil were to trade with, say, Russia or the Philippines? Would it do that in renminbi? It's certainly possible, but at the moment that non-bilateral trade is still mostly carried out in US dollars. Why is that? Well, network effects are really important here. Because the dollar is so established as a trade currency and as a way of funding trade, most of that's happening in dollars, it takes a very long time for that momentum to disappear. So at the moment, I think the only real alternative to the US dollar would be something like the euro, because that's the second largest currency in terms of reserves, and it satisfies a lot of those constraints for what you'd look for in a reserve currency. So finally, what would de-dollarization mean for the US economy? I think the first point here is that the speed of de-dollarization is absolutely critical. If it happens quickly, that could be very destabilizing. Consider just one aspect of that. Think about how much of global equity markets are invested in the dollar. 60% of developed markets are in US equity markets. So if the US dollar were to suddenly devalue, that would have a huge negative effect on all of those investments. So a lot of financial plumbing at the moment depends on the US dollar. And if we were to pull that rug out from the financial markets, it could disrupt things hugely. However, as we saw in the case of the UK, what I'd expect is that the US would see a very gradual decline, not an overnight shift to another currency. But I think what worries most Americans certainly is the loss of political influence and economic influence that goes with loss of reserve currency status. That's hard to quantify, but just look at the example of the UK and how it's lost its political clout over the decades since the Second World War. So what would the direct effects be on the US economy? Well, we saw for the UK that it meant devaluation of its currency, and that wouldn't be all bad for the US. For example, service exporting companies like Apple and like Netflix earn a lot of their revenue in foreign currency. So this would boost their revenues in dollars. It would also make their exports more attractive. However, it would be inflationary because the US imports more than it exports, and there'd be a pass-through effect on inflation as those imports became more expensive. Then the final effect, which would also be a problem for the United States, is that because central banks wouldn't have to buy so many treasuries, there'd be less demand for those treasuries and yields would probably be higher. That would push up the cost of borrowing for the US government, but also for US companies. And that would probably be a drag on growth and also on US equity market growth. So I think when you actually look at the evidence of what currencies could potentially be global reserve currencies, the list is fairly short. And I can't really see the currency which is in second place, the euro, being widely adopted, certainly not at the moment. And I think the renminbi just doesn't satisfy a lot of the constraints, particularly easy convertibility. I think for the time being, we're just going to have to get used to the dollar being dominant. And certainly for bilateral trade, we could see a multipolar world. But the dollar, I think, is here to stay for the rest of my lifetime at least. Now, don't forget our offer from Wise. You'll find a link to that in the description beneath me, where you can get a free transfer of up to £500 if you're a new Wise customer on your first transfer. And, as always, thank you for listening.